Florida was once marketed as the affordable American dream. Warm weather, no state income tax, and a cost of living that made it possible for middle-class families to breathe. That version of Florida is fading fast. In 2026, affordability is no longer about whether you can buy a home. It's about whether you can afford to keep living there year after year as insurance, taxes, fees, and basic expenses quietly stack up. These are the top 10 Florida cities that have become the most unaffordable, starting from number 10. Number 10 is Orlando. Orlando's affordability problem isn't driven by luxury living or oceanfront demand. It's driven by volume. Millions of tourists pass through the city every year, and that constant demand reshapes prices across the board. Housing is no longer priced for residents, it's priced for visitors and investors. Many single-family homes have been converted into short-term rentals, shrinking long-term housing supply. Rent has steadily climbed, while wages for service workers remain relatively flat. Utilities are higher due to infrastructure strain. Car insurance is expensive because of traffic density, and property insurance continues to rise even though the city is inland. By 2026, the average household in Orlando is spending a much larger portion of income just to maintain the same standard of living they had a few years earlier. The city still offers opportunity, but affordability has quietly slipped away. Number 9 is St. Petersburg. St. Petersburg used to be known as the affordable alternative to Tampa. Over time, redevelopment and gentrification transformed the city. Older homes were renovated or replaced with luxury properties, pushing prices upward at a rapid pace. Property tax assessments increased sharply as home values surged, catching longtime residents off guard. Renters faced similar pressure as demand outpaced supply. Insurance premiums, especially near the water, continued to rise, adding another layer of cost. By 2026, many residents who helped build the city's character can no longer afford to stay. The issue isn't a sudden collapse. It's a slow financial squeeze that leaves fewer options every year. Number 8 is Fort Lauderdale. Fort Lauderdale's affordability crisis is deeply tied to climate-related costs. Flood mitigation projects, infrastructure upgrades, and rising insurance premiums have turned homeownership into a high-maintenance financial commitment. Even modest properties now come with large monthly carrying costs when insurance, taxes, and maintenance are factored in. Condo owners face additional pressure from HOA increases and special assessments aimed at meeting updated safety and reserve requirements. Renters are not spared either, as landlords pass these costs along. By 2026, Fort Lauderdale has become a city where the cost of staying often outweighs the benefits of living near the water. Number 7 is Destin. Destin represents one of the clearest examples of how tourism can erase affordability. The housing market is dominated by short-term rentals, leaving very few options for long-term residents. Properties are priced based on vacation income potential, not local wages. As a result, teachers, healthcare workers, and service employees struggle to find housing within reasonable distance of their jobs. Rent prices resemble seasonal rates rather than monthly living costs. Insurance, maintenance, and property taxes further inflate expenses. At this point in the video, if you're finding this breakdown useful and want more clear explanations like this, subscribe for more content that breaks down housing and cost of living realities without hype or exaggeration. Destin remains visually stunning, but financially inaccessible for most people who actually work there. Number 6 is Sarasota. Sarasota's affordability problem is driven by demand from wealthy retirees and cash buyers relocating from higher-cost states. This influx permanently shifted the pricing structure of the city. Home prices rose quickly, but the real burden shows up in ongoing expenses. HOA fees, insurance premiums, and community maintenance costs add hundreds or even thousands of dollars to monthly budgets. Many properties appear affordable at first glance, but the true cost emerges after purchase. By 2026, Sarasota functions as a city where employment opportunities exist, but living locally requires a significantly higher income than the jobs provide. Number 5 is Boca Raton. Boca Raton sits at the center of Florida's condo affordability crisis. New structural safety laws require older buildings to maintain large reserve funds. This has resulted in massive special assessments for condo owners. Some residents face bills large enough to wipe out savings or force a sale. Insurance costs and HOA fees continue to rise alongside these assessments. What was once considered an ideal retirement destination has become financially unstable for many fixed-income residents. By 2026, Boca Raton highlights how regulatory changes, while necessary, can dramatically reshape affordability overnight. Number 4 is Palm Beach. Palm Beach operates in a completely different financial reality. Property prices are driven by extreme wealth concentration, not local wages or regional norms. Even modest homes by Palm Beach standards come with enormous tax bills, insurance costs, and maintenance expenses. There is very little middle ground in this market. Ownership requires ongoing financial capacity, not just a large purchase price. Palm Beach has effectively priced itself out of reach for anyone outside the ultra-wealthy category. Number 3 is Naples. Naples has become one of the most cash-dominated housing markets in the country. Mortgage buyers face heavy competition, and even when prices stabilize, ongoing costs continue to rise. HOA fees, insurance premiums, and service costs add substantial financial pressure. Naples offers comfort and security for those with high net worth, but for everyone else, the cost of maintaining a home has become overwhelming. By 2026, Naples is less about affordability and more about long-term financial endurance. Number 2 is Miami Beach. Miami Beach faces a combination of climate risk, regulatory pressure, and high demand. Flood insurance, resilience fees, and infrastructure upgrades have significantly increased the cost of ownership. Condo owners are especially impacted by rising maintenance requirements and reserve contributions. Monthly expenses can rival rent prices in major global cities. Miami Beach is no longer a casual lifestyle choice. It's a high-cost financial commitment that continues year after year. Number 1 is Miami. Miami has fully transitioned into a global city. Demand from international buyers, remote workers, and high-income professionals has pushed housing costs far beyond what local wages support. Rent levels have surged, insurance premiums are among the highest in the state, and property taxes continue to climb. Miami no longer competes with other Florida cities. It competes with global financial hubs. By 2026, affordability in Miami is not about finding deals. It's about whether you can survive the long-term cost of staying. Florida's cities didn't become unaffordable overnight. They changed gradually through demand, policy shifts, and rising operational costs. The sunshine is still there, but the margin for error is gone. Understanding where affordability disappears is now just as important as knowing where opportunity still exists.